Now, Steve, this US presidential debate has created a bit of a stir in the markets, but also we've seen that there's been a turnaround and some sentiment, I think, is changing. That this strongly dollar short positioning seems to be a bit stretched for me, but I think we're looking at some interesting trades on potentially the S&P this week for you. Hello everyone and welcome to another of our Trader Talks videos with myself, Richard Perry, market analyst at Handtech, and also Steve Miley, the market chartist. Now, as ever, we're going to be pointing you towards our website, hmarkets.com, where you can sign up for a free demo account or sign up to a live trading account in 4 easy steps. Now, Steve, this US presidential debate has created a bit of a stir in the markets, but also we've seen that there's been a turnaround and some sentiment, I think, is changing. That this strongly dollar short positioning seems to be a bit stretched for me, but I think we're looking at some interesting trades on potentially the S&P this week for you.
Yeah, well, I'm going to kick off on the S&P. Yeah, and the market's kind of, well, we've got a lot of dominant trends in various directions in here, and it kind of depends on you know what kind of trader you are, investor you are, you know how you're going to read these charts in here right now. And for us, as technical analysts, we're really looking at markets going into a bit more of non-trend consolidation phase, and it doesn't surprise me in the slightest, given that we're going into a huge event, both the winter COVID-19, you know, second wave, alongside the presidential election. And you mentioned the
I think this election is really uncertain. I mean, the way that the debate went last night was just terrible, wasn't it? And it really does show that the markets are going to be pretty nervous, I think, in the next few weeks.
Well, yeah, I think nervous and indecisive. And I mean, the takeaways from me were in there. One, you know, Trump not willing to say, you know, easy transfer of power, and the markets didn't like that on the downside. From what my feelings, though, are the markets are kind of discounting in the fact that you get a clean sweep from the Democrats, and they're okay with that now, which would normally be a risk-off event. The markets don't tend to like.
I think it's more fiscal spending if you get that, isn't it?
Yeah, it is. So with that, which probably going to be positive, right? To keep markets up, so they're kind of liking that for now. Generally, though, Democrats, are not seen as positive from the markets, but I think for now that kind of works for them. A clean sweep would work for them, but the transfer of power and all the indecision around that, looking at the options volatility markets in here, they're now pushing out volatility way into December, implying that November's not going to be done deal. We're going to be still fighting this election on some front.
Well, I think you look at the uncertainty that the markets reacted to, I think last night, futures fell, didn't they?
Yeah. And that kind of takes us back to this S&P 500 chart, though. So I'm not particularly bullish. I'm not particularly bearish in here. We've had that rebound in here from Friday. And for me, that's probably done enough. We've got back above the 55-day moving average. It's come off some support in here, important support, just below the market. We held at 32.10. There was some important support just below there, around just below 3,200 that we've got from back in July. And for me, whilst we're above that 32.10 low, we're kind of giving the market the benefit of the doubt, and there is still risk for maybe a push up towards 34.29, and then for more of a range theme for me going into the first part of October. However, 32.10 goes, it all looks more negative again, next wave down, and it could get ugly going into the election. If you get back above 34.29, you're probably in more of a chop fest, more of an erratic consolidation phase going into the election.
Yeah, I mean, on our slide today, I put a crossroads theme, and I think it is a crossroads again. I think you've got the bullish sentiment through Wall Street has now, I think, come to an end. I think if you look at the momentum indicators, this RSI struggling under 50 now, whereas previously through the bull run it was consistently above 50. That is for me a concern. Also, this 55-day moving average is a worry as well. So I think it is. With the uncertainty surrounding this election, I think there's an attraction probably more towards testing the 32.10 mark for me. But essentially, if that support does hold, then I think we're still okay. But if that does go, then you really do look more corrective, I think. And if, as you say, if Trump refuses to give power over, then I think we are in that corrective territory that the markets will see.
Agreed. And then you're kind of looking at the euro versus the dollar, but we're going to start off by looking at some of this dollar crowding.
Yeah, the dollar positioning is really stretched, I still think. And we had a bit of a kickback in the last few weeks, but it doesn't really seem to have unwound that positioning. And that is still at a stretched level. And I think there is still the potential for this near-term dollar rebound to take hold. Now, what we've seen in the last few days on euro dollar, my chart here, is that we've seen a rebound back into the resistance band, key between sort of 17 figure to 1750, that old floor that we saw through August and September. But I think that again is crossroads territory, because we see that that's the resistance overhead supply, but also where you're going to get the downtrend of the last 4 weeks starting to come into play as well. So how the market responds to this resistance is going to be really important, I think. As I said, with the positioning of the dollar being stretched and the uncertainty of the election, I think that lends to a stronger dollar in the coming weeks in front of this election, and because of the risk appetite angle as well, that would be falling and more of a safe haven bias. So I think that sort of lends towards dollar strength, and I think that pulls euro dollar lower.
Yeah. So obviously with the positioning, and if we do, obviously, going back to the S&P, if we take out that low 32.10, then the dollar goes bid, euro dollar goes lower, and then you reinforce that downtrend probably back through 116.10. As you say there, I mean, I see that on your chart there on the euro dollar. I've been flagging that as a potential, like almost like a triple shouldered head and shoulders top in there, and that neckline comes across right at your 117 level there. So that's going to be critical, I think, in the very short term. And you've also got that little counter downtrend line that you've got here in red. I think it needs to get above there to ease the negativity. Otherwise, all the threat is back lower for me for euro dollar strength coming back through. And should the S&P 500 roll lower, back through that 32.10, that's going to just just influence this and see us lower too.
Yeah, and you've also got payrolls to think about this Friday, I think. And
of course,
once you're through that, I think you're going to see some more dominant US dollar trending, I think.
Sure. Sounds good.
Excellent. Thanks, Steve. Well, we'll speak to you all next time for some more trader talks. Good luck in your trading, everyone.